Allianz is looking to push deeper into alternative asset classes as its giant bond manager, Pimco, struggles to attract new money. Let's bring in none other than Dani Burger. Dani, Pimco's DNA is obviously in bonds, and it's not going too well for them.
No, I mean, look, they're moving to alternative assets, or at least they're shifting the focus more towards that. It's something that would absolutely make Bill Gross very angry if he was still at Pimco. But look, it's twofold, the reason for this. One, it's industry dynamics. The other is market dynamics. As we talk about all the time, last year was horrible for bonds. Pimco saw 75 billion euros worth of outflows from their products because of that. Yes, the first quarter has picked up a little bit, but in conversation with our Bloomberg reporter in Frankfurt, Stephen Call, the CEO Oliver Baete basically saying investors are still skittish. On the industry side, they have a lot of active funds. You can go out and buy a cheap passive ETF right now on bonds. So on this, he said, again, to our Stephen Call, that everyone assumes that bond flows have to come back once we hit a peak in interest rates. But the question is, how much of it will go into passive strategies and what goes into active strategies? We have to make sure we remain attractive. The good news about alternative assets, things like real estate, things like private credit, the two asset classes he called out specifically, you can't really do them passively. They have to be active strategies. So you can charge a bigger fee for those.